Hi there, my name is Wendy Bishop, and I've just received your financial reporting for your psychotherapy practice. And I wanted to go over the details that were there to see if we can understand how we can make changes and how you're doing so far this year. So, this is a snapshot of the month of May 2024, and we're going to talk about your cash position as well as your revenue goals and profitability. And I know that I said that out of order, and I did that on purpose. I want to talk about your cash position first, and then we'll get into your revenue goals because we need to spend a little bit more time on your profitability. So, for the first section, which talks about cash position, it looks like you are a little shy of what your expectations are as far as your personal target. There's about a $4,000 difference in what your overall cash position goal is. However, if I'm looking at the way that it's divided out, you have some cash on hand and you have cash in savings, and there is a significant amount of cash on hand that looks like it could be moved into your savings account, and this may be a timing difference. And I think that by having it sitting in cash on hand, you're missing out on some essentially free income by not taking advantage of some of the higher yield savings accounts that are available. If your savings account is not giving you at least 4% right now, because the interest rates are still pretty high, and banks are still giving 4%, banks like American Express Online, Wealthfront, Goldman Sachs, places like that, that is an opportunity for you to earn some additional income just on cash that you have sitting there. As soon as possible, I would recommend that you go ahead and move that cash that's sitting, which seems to be in maybe a checking account that's not interest bearing, move that into an interest bearing vehicle and keep the least amount of cash that you can have on hand to maintain your business. And transfer back and forth. But once again, I really want to focus on moving that cash out of there, out of just the cash on hand, to a savings account, some type of higher yield, interest bearing vehicle to garner more interest. Based on your owner salary distributions, it looks like you may be an S Corp. So the company itself doesn't necessarily need to have any cash earmarked for taxes unless you have state taxes that are due at an LLC level, LLC or S Corp level. I've never seen an S Corp that was taxed at the state level. It's generally an LLC. So I'm not as concerned that you don't have any cash earmarked for taxes. That may be an opportunity for you to bonus yourself out, or just do a owner distribution at the end of the year to cover your estimated taxes personally. But at the moment, I'm not as concerned about you not having cash earmarked for taxes unless there is a significant state liability that you think that you would need to cover. So let's look at our revenue goals. I am not as concerned that you are annually that you're shy 455,000 simply because it's a timing thing. Right now, it looks like you are on track to on your monthly goal just by doing the average amount of revenue that you've earned over the month. Even though your monthly for the month of May is 77,000, over the last 5 months you've made an average of $68,000, $68,970 per month, which is well above your monthly goal. And if you keep that average going through the year, you should exceed your annual goal. Let's see, by times 12. By about 27,000, which is favorable. And once again, we talk about the cash that you have in on hand. If you can move some of that cash from your cash on hand to a savings account, a higher yield investment vehicle, savings account, then I think that it would increase your overall revenue. All right, let's look at your profitability section. And I don't see a lot of detail to give me information as to why your cost of delivery and overhead is so high. But I think that we need to focus on that because those are both exceeding what your personal target is. We need to figure out if we can bring that cost of delivery down by 6% so that it can fit into your personal target, or do we need to adjust what you expect to make as far as your net profit to accommodate for things that are a little bit more expensive this year that you didn't anticipate? Like, was your internet connection a little bit more this year? Did you have increase in administrative costs to deliver your services? What is the driver behind those differences of 6% and 11%? Your overhead, did you have higher rent costs? Were there some repairs and maintenance that weren't expected that needed to be done to the building? What's the driver behind that overhead? And once we can see exactly what that is, I think we'll have a better handle on how to bring those numbers back to your personal target, or do we need to adjust the personal target to fit a more realistic expectation as far as the cost and, of course, your net profit. With both your cost of delivery and overhead increasing by a significant amount, is going to drive down your net profit. And it looks like just by your own salary percentage that you're not taking that out of the company. It's actually an additional expense that's hidden in there that we need to discuss and see if we can figure out how to bring those costs down. Owner distributions, you're off target by about 11%, but that may be something that can be rectified at the end of the year. A lot of times when I talk to people about taking out distributions from their S Corp, does it make sense to actually take the money out, or could you use that to invest in a new machine or a new education course for your practice? What things can we do instead of taking that distribution out of there, and is it necessary for you to use personally versus investing that back into the business? So I'm not nearly as concerned about the fact that your owner distributions are pretty low. And that may be something to reevaluate at the end of the year. As far as your owner's salary, I would say I would continue to stick with what you have, but just by the amount of cash that you have on hand, it looks like you could potentially take out more as far as your owner's salary to meet that 13%. However, since you still have these issues with your cost of delivery and the overhead, you may not want to make any major changes in that area if you can afford to, and just really dive into figuring out how to bring your other costs down before you increase a cost. Let me know if you have any questions, and I appreciate your time. Thank you.